Good day. Late afternoon tea with Travis. It is October, oh my goodness, December 17th, and it's Wednesday. And for those of you here in Oregon, you are probably either sitting in your home enjoying the nice fire, or you are out freezing your kids building a snowman. But here we have a couple good inches of wet snow, and most likely will be snowed in tomorrow. So that's kind of exciting here to enjoy those times with your family and just really embrace the times when you can't be busy. So that's interesting though, because mortgage rates have dropped so much. It's really hard not to be unplugged and not respond right now, because rates are incredible. Yesterday, as you know, the well, not the Treasury, but the Fed funds share reserves all made an announcement that they're going to cut the Fed funds rate from 1% all the way down to a range of 0 to 1/4, which has never been done in history, where they give you a range. So I guess they're going to apply 0 in certain circumstances and 1/4% in other circumstances. But probably the biggest thing that came out of it, because typically what happens is when the Feds make such a drastic cut like they did back on Martin Luther King Jr. holiday back in January, they made a 3/4% cut back then too in January, and mortgage rates worsened. A 30-year fixed mortgage worsened 0.75% in a matter of 4 weeks because of that cut. So we get confused when they say on the news that the Feds have cut rates. It's not mortgage rates, it's short-term rates, which often is a clue to push inflation down, and inflation is the enemy of bonds. And so when they make that drastic of a cut, typically it makes mortgage rates go up. The great news yesterday, though, was that the Feds came out and said, not only are we cutting rates this much, but we were going to do whatever it takes in our capability, which is pretty broad as the U.S. government or the Treasury, the Fed Bank, to correct this housing situation. And they said they're basically going to buy and commit to making buying $600 billion worth of loans. And so that's going to open up things, and even now the talk is jumbo loans, which has been a real hot topic because there's so many qualified clients, and you may be one of them, that has a big loan, has great credit, and has great assets, but you have a terrible rate because no one's buying these loans. So Fannie Mae is talking about broadening that horizon and making jumbo rates a lot more competitive, back closer to conforming rates. So that'll be huge news if that actually comes out in January when these funds become available from the government. The bad news is, though, obviously when we're in different time zones, when the Asian markets opened, they heard the news about our drastic Fed cut and what the Fed policy stance was. The dollar took a huge plummet against the yen and is down to a 13-year low as far as its value compared to the yen. Not much different when it hit the European markets when they opened up early this morning or late last night. The euro gained a lot of ground too against oil, or against the U.S. dollar. So that's a problem. Mortgage rates. A lot of people talk about mortgage rates going to be pushed down to 4%. Let's hold off and wait till mortgage rates get really good. Well, the problem is we live in a global economy, and if our dollar keeps continuing to weaken and weaken and weaken, several things will happen. Inflation will start climbing again. Oil prices will start going again, because I've mentioned in the past, oil is traded around the world based on U.S. currency and U.S. value. So if you could buy a barrel of oil, let's say for $50 in euros and $50 in U.S. dollars, and the dollar weakens, well, it's going to cost $75 for that same barrel in U.S. money, but it's still going to cost $50 in the euro. So it's really important that our dollar does not get out of line and tweaked enough to start causing forced inflation, which will directly infect mortgage rates. So this idea, and this pie in the sky idea that rates are going to get down to 3.5 or 4.5 or whatever it is, I think is pretty far-fetched, because the technical factors, those ceilings of resistance we face, as well as just the global economy that we operate in, won't allow us to do that. Outside of that, we will continue to see what happens tomorrow. This was unprecedented news and comments made yesterday by the Fed, and so we are lined up for good things. Mortgage rates, again, I locked 6 clients this morning at 4.75 on their circumstances with an APR less than 5. It was like 4.92 or something. So awesome news. Great time to buy a rental property too. I mean, you can cash those deals all day. So give us a call if you have any questions. We look forward to serving you, and be blessed.